Hello everyone, welcome again. We will continue with the corporation tax and we will finish our corporation tax in this video. Now let's move to our notes without hesitation. As you can see on your screen, it's page number 61 of your lecture notes. Page number 61, it says about groups. Right, it is the last page which is left. So we're almost done about that. Now first, it says group relief group, which means that if you have made a loss, you can set off that loss against the other group members. Now for setting off the loss, there is certain criteria. You must have 75% control on the companies. Those 75% group will be considered as a group for the loss relief purposes. So as you can see on your screen, it says the group relief, a provision enables companies within the 75% group to transfer trading losses to other companies within the group. Then it says within the 75% group, surrendering company can specify an amount of current period trading losses, excess property business losses, excess non-trade loan relationship deficits, and blah blah blah. Now first thing is that there are two kinds of companies. Excuse me. One is a claimant company, another one is a surrendering company. Now claimant company is a company which is claiming the loss. The company which had the profit, which want to set off against the loss. So the company which had profit is a claimant company. The company which is a loss making company is a surrendering company. Right? So it says within a 75% group, surrendering company can specify an amount of current period trading losses. Then it says excess property business losses. Now what are excess property business losses? The excess of the loss over the profits is called excess property business losses, right? So if you have a profit of, say, for example, £1,000 and you have a loss of £1,500, so the excess is £500. So that is called excess property business losses. Likewise, excess non-trade loan relationship deficit. Now we know what non-trade loan relationship deficit is. When you have taken a loan and you have used it for non-trade purposes, interest paid on that will be deducted out of the interest income. Now it is called in non-trade loan relationship, and we will only set off excess non-trade loan relationship deficit. Then it says excess qualifying donations to be surrendered between UK companies. After that it says only current period losses are available for group relief. So whatever the current period losses are, we can only set off against the group members. We cannot set off the previous carry forward losses against the group members. So only the current period losses can be set off for group relief. Capital losses cannot be surrendered for group relief. There is a certain topic, there is a separate topic on capital losses. There is a, we can set off against the group relief, but there is a separate group for that. We will study in a minute. So it says capital losses cannot be surrendered for group relief, and after that it says a claimant company can claim a group relief against profits after all other relief available, including the qualifying charitable donations. A claiming company can claim group relief against profits after all other loss reliefs, including qualifying donations. Right? Now, after our last topic in this section of the F6, which is corporation tax, our last topic is capital gains group. Now, just minutes ago, it said that capital losses cannot be surrendered for group relief in our previous section. And now this is the thing where we can set off the losses within the capital gain group. Now, what is the capital gain group? It says that companies are in a capital gain group if at each level there is a 75% holding and top company has an effective holding of over 50% in group companies. Now, as you know that there are when it is a group, so there will be one parent company, then subsidiary. You might have sub-subsidiary as well. So what does it mean? That there will be 75% control at each level, and the top company will have 50% effective control on all of the other companies. All right. So it is something like that. Now, if you have studied F3 or F7, you might already know it. So basically, if there is a parent, then it's a subsidiary, then it is a sub-subsidiary. So basically the effective control of the parent company should be more than 50%, and at each level there is a 75% control. and then that will be called a capital gains group. Now, reliefs available to the capital gains group, intra-group group transfers. So within the group, within the capital gains group, if anything is being sold for capital gains purposes, it will be disregarded. There will be no capital gains. Companies in a capital gains group make intra-group transfers of chargeable assets without a chargeable gain or allowable loss to be arising. Then after that it says matching group gains and losses. So companies within a capital gains group can transfer capital gains and losses to each other. So if they are within the capital gains group, only then they can set off the losses within. They can set off the losses against each other. Not only losses, they can set off the gains as well. So for example, if I am a company, I have a gain instead of the loss, I can set off my gain against the other company's losses. If I have a loss, I can set off the loss against other companies' profits. So in both, I can do in both ways. Right? After that, it says rollover relief. Now, if you remember from your capital gains tax, when you have sold an asset and all of the proceeds you have invested in another asset, you can claim the rollover relief. Right? Now, for capital gains, for capital gains group purposes, a whole group will be considered as a single entity. So, for example, there are for example 4 companies within a group. If one company sold an asset, but that the first company which sold the asset did not buy another asset, the third company bought another asset within that period, then it will be considered as the same single entity, and then you can claim the rollover relief. That same company which have sold the asset does not need to buy the asset, does not need to reinvest the amount. Other companies can reinvest the amount and they can claim the rollover relief. So the whole companies within a capital gains group, they will be considered a single entity for rollover relief purposes, as long as they have reinvested within a period of 1 year and the 3-year limit, 1 year before and 3 years after. Right? So it says, if a member of capital gains group disposes an asset eligible for rollover relief, then it may treat all of the group companies as single unit for purposes of claiming rollover relief. Right? So we have finished our capital gains tax. Now let me show you the questions which you can do, which are relevant for companies. Now anything from the companies, if you are not sure about, like if there is a value tax part and you haven't studied any value tax yet, then just leave that part. When you have studied value tax, then you can come back to that portion and do the questions. Now these are the questions. It says corporation tax liabilities. Now the first section is about MCQs. So there will be few MCQs question which are very, very easy, to be fair with you. And the section C, there are a few questions, and one of the question, a couple of questions basically we have already done in 178 and 180. These are the questions which we have already done. So basically from 178 to 190, these are the questions which are relevant for corporation tax. These are long questions, 10 mark each in most cases. So you can do these questions. Right? So that's it for this video, and we have finished our corporation tax as well. Right? Now in the next video we will start our value tax, which is the last topic of our ACCA F6 taxation. Right? Thank you very much and goodbye.